when you least expected it. We're starting it up. This one will be a short one, but we're going to be kicking off earnings season here. Next week's going to be a lot bigger than this week, obviously. The week following, massive. But we're going to do this week just because there's still a couple companies worth looking at. So let's take a look at these companies. Obviously, not much going on here Monday, so I'll post it Monday. Why not? Now, Monday, the only one that they necessarily define as worth looking at is Remark Holdings. This company a lot of people do own. I don't particularly have many opinions as far as it's concerned. Not a stock I own, and I don't necessarily know what the market holds for it right now. At this rate, we see a lot of positivity, so it's hard to say. Tuesday before open, we see Paychex. After close, you have Aspen University, followed by Levi's. Levi's is one that I would like to focus on for many reasons, really. So, one thing you might notice with Levi's is they're actually expected I believe a negative 45-cent EPS, or around negative 50. In my opinion, I think that's a little high. Now, there's many things to consider here, because obviously this quarter was less locked down, but if you look overall through the retail sales reports over the past several months, you see clothing has been down solid 50% each of the months. I think Levi's is going to take a big hit here, because there's no way of saying that this brand is the one that transcends all others and didn't happen to find a major loss. So I think this EPS line is going to be closer to a negative $1, if I'm being completely honest with you. And I could be wrong on that aspect, and they could impress me, but just compared to what I know from other clothing companies so far, I would not expect really them to hit even the negative 50 cent. If a company like Nike, which uses dirt cheap labor, can't even hit their estimates, and they posted over a negative 50 cent loss, or right around a negative 50 cent loss, I don't think Levi's can hit it either, because Nike was expected to actually have a positive EPS quarter. So I could see Levi's missing on the EPS aspect, and revenue I think will miss as well. I think that goes without saying. I don't think this is a brand that's transcended and gone in the online game, better than others. I really don't think it has. So that's my opinion on the matter. Could be wrong, but we'll see. We have Smart Global Holdings. Before open, you see Simply Goods, or Simply Good, I should say, Industrial Direct, MSC, NTI. After close, you get a look at Bed Bath and Body Works, or Bed Bath and Beyond. I just mixed two companies, and I'm sorry, but Bed Bath and Beyond, obviously, this is a non-essential retailer. I need to tell you that. This is a non-essential. You know what that means? It was shut down for a decent portion of this quarter, in a lot of states for sure, and even around the globe. So this is also a sector in which we found a decrease in demand. Once things did start opening up, you saw a decrease in demand. Now, this company is a titan of its industry, obviously, very dominant in what they do. So there's definitely positives, there's definitely negatives with the company, but I don't think they're going to hit on an EPS standpoint. I really don't think they will, and the revenue I think they'll miss on as well. It all kind of depends on how they establish their online business, and you see some companies that have succeeded quite well in that. Companies like Target posting a 10% comp increase in sales, really entirely due to the fact that they boosted online sales over 100%. In store, they saw completely flat. Now, if Bed Bath and Beyond, there we go, don't want to botch that one. If Bed Bath & Beyond can do something like that, we can see it. But it's just not a company where I see that being possible. I don't see them actually being able to do that. I don't see it happening. So I don't mean to be negative, but this whole week I'm feeling negative on these companies. After that, Saratoga, as well as EXFO. Don't mind me. Can't speak. So Thursday before open, we've got Walgreens Boots Alliance, which, as you might know, I just call Walgreens, right? So Walgreens, I think, has the definitely good opportunity of being the shining star in all of this. Naturally, the pharmacy is the moneymaker for this company, and I do believe that in most cases, prescriptions are up. Not necessarily just for current pandemic situations, but I think it's preventative as well. People have asked for drugs that are preventative for current pandemic, as well as those dealing with it. Definitely, I just think there's a good chance that Walgreens seeks to benefit from that, and that is their major EPS mark. They are expected to decline year over year in EPS by a decent bit, right around 30%, I believe. And I don't think it'll be as big of a decline as they expect. I think there is definitely a decline year over year, as there has to be. Just with everything going on, the increased cost of doing business, there has to be a decline. But I do think they'll beat on an EPS standpoint and hit around $1. And I could be completely wrong. I don't necessarily know how the cost will hit them. If you think about something like a pharmacy, obviously the costs are a lot more, increased as opposed to what you'd see for just a normal retailer, because everything has to be perfectly sanitized in a pharmacy, right? The cost of labor definitely probably goes up because of that. So they could miss for all I know, but I believe with strength of pharmacy, I think that they'll hit an EPS beat, and I think revenue will beat as well, because you think about an essential company, this one is that. People purchasing a lot of anti-allergy medicines, a lot of everything here they couldn't get elsewhere. A lot of it's due to lack of availability. Walgreens, I don't know necessarily what their stock levels looked like during this pandemic when a lot of places saw decreases. But Walgreens, I know, probably picked up business because of it, right? Because items where you typically wouldn't go to Walgreens to buy, or maybe the normal person didn't, they're probably going there now if their normal retailer was out or had a difficulty getting it in. So I think Walgreens seeks to have a good looking quarter. And then after them, you have Helen of Troy, AZZ, and Jarek. Thursday after close, you have another company I'd like to look at in WD-40. So obviously you know them for just their capstone product, the WD-40 lubricant. But I'd like to look at this as a home improvement company. And as a whole, for retail, home improvement has increased this quarter. It just has. So they do seek to benefit because of this push for home improvement. What I like to reference really is when you think about lockdown, when you're spending more time at home, you notice a lot more. The squeaky wheel on your lawnmower, the squeaky chair that you have, your office chair squeaky. WD-40 seeks to benefit quite a bit, just due to the fact that, well, people are taking on a lot of home projects that they wouldn't have previously because they had a lot more time because they were locked down. So I think WD-40 EPS line, I can't tell you what it's going to be. It's one of those companies where these manufacturing companies, it's super hard to tell. I don't think I have a good estimate for it, but I do think the revenue estimate of only $100 million, I think it's going to be a beat. They're expected $108 million, I believe, and I don't think it's going to be a major beat, but I do think they will beat by a few million dollars. But it will be a beat in my perspective, because I do think they picked up business because of this. I could be wrong. Because you think about companies that actually sell these products, maybe they weren't buying it. That is one thing you have to consider. That maybe these companies weren't purchasing the products because they didn't think they'd be able to sell, or costs were up. So one thing to consider. But I think they'll beat on a revenue perspective. After them, you have Simulations Plus, Franklin, Covey, and Capstone. And following Friday, you've got the Greenbrier companies. So that's it for this week, and next week will be a lot much more going on. But I just wanted to kick off earnings season with a bang. Hopefully, we're happy, and we're ready for next week. I can't wait. So we're gonna go back to the posting these on Saturdays, followed by the weekly recap on Sundays. So I hope you're ready for it. Enjoy.